First off, when I buy any asset or when I go to research any asset, I have a fundamental analysis checklist that my business partner actually helped me create. But I used to do it all in my head. I go through literally everything: the liquidity, the team, what problem they're solving, their competitors. Is this a problem worth solving? Like, is it a hair on fire problem? Partnerships, tokenomics is a big one. And I give everything a score. And whatever projects have the highest, the higher the score, the higher the allocation in the portfolio. And if it's not above a certain score, it doesn't even make it onto the portfolio, but it'll be on the watch list. And then after that, before I buy the thing, I have my take profit strategy set up already. And I'm going to be coming out with a Zora take profit strategy video sometime this week. You want to have a plan to get out before you get in, and you want to come up with a conservative estimate as to where you think price will hit and an aggressive estimate, and set up your take profit strategy to where even if it doesn't hit the conservative or even if it exceeds the aggressive, you're still able to profit, right? So I'm gonna just share my screen here, and I'm gonna talk about, I'm not gonna go into my take profit strategy because like I said, I am putting a video out on that. So stay tuned for that. It'll be on my Crypto Noah YouTube, but I will just kind of talk about some stuff here. So right now, we have the fully diluted valuation of Zora at 641 million, and the market cap is 208 million. So the difference between these two is that the FDV, fully diluted valuation, is taken into account all of the tokens. And this is how businesses are evaluated in traditional finance. Like when you're evaluating a stock, you always look at the FDV. The market cap is just taking into account the circulating supply times price. That's the market cap, right? And the disparity between these two is the tokens that are gonna be unlocked that we just looked at. Now, if we go back to this unlock, right? And let's say, so around 10 million is gonna be unlocked. And then the next month you have 9, 10, 11, 12, 13, 14, 15, around.
So are we talking dollars or tokens?
Dollars. You see the dollar sign on the side? Always want to know about dollars. And also, this is dollars at current prices as well, okay? So this thing can change. So we have around $20 million that's getting unlocked over the next like 2 months. Over the next 3 months, you have 10, 23, 33, 32. So 31 million. So you got around like 40, 50 million being unlocked like around the end of the year. Now, not everyone's going to sell. So let's say $40 million is sold. So if you take a $208 million market cap, that goes down to what, like $170 million market cap. So you have to think to yourself, like, okay, if this is a $175 million market cap, do I still think that the demand can outpace that? And my answer is absolutely. So that's why I'm still willing to hold it, because it's not a hell of a whole lot of selling pressure in comparison to what I think the demand is going to be.